Two strange things are happening in the Indian equity markets. This is happening because of retail participation, and retail is driving this. One is a lot of retail money is going abroad. This is something that has happened recently, and the trend is continuing. Let us examine this trend. Welcome back to Berich. All brokers, starting with 5paise.com, Motilal Oswal, Geojit, etc., have started to offer clients the ability to buy foreign stocks. Where foreign stocks are too expensive, they are also giving them the options of buying fractions of stocks. The gambling instincts of Indian retail investor have got honed on. The Indian stock market seems to be in a range between 12,000 and 11,000 and keep moving up and down. To profit from short-term volatility during this election season, which ended yesterday, in the last 30 days, lot of Indian retail investors have been punting in American stocks. Sadly for them, when you look at last 1 month when they were punting, American stocks underperformed its Asian peers by a distance last month. But there is also a set of younger generations of Indians who want to buy own stocks in Twitter, Facebook, Apple, etc. These people have only way they can own these stocks is by opening trading accounts abroad and buying them in the US markets, either at the Nasdaq or the New York Stock Exchange. This is also an increasing trend. Also, Indian companies are taking global listings because listings in India are cumbersome. MakeMyTrip.com is an example. Lot of Indian employees in IT industries have their stock options credited abroad, and they can retain it even after they quit their company. All this has meant that the strong lines that stop Indians from investing abroad for many years is now over. The lines are blurred, and for a long time we have been looking at money coming from abroad. But if you look at the RBI figures, you will find that money going from India has also initially increased. Initially, the rich Indian investor was looking at buying immovable property abroad, mainly in West Asia. Dubai's mad real estate boom was funded by rich Indians. Lot of rich Indians also bought Tony properties in England and London. But all that has changed. In the current year, 2019-20, for which the last year for which RBI data is fully available, the year 2019-20, $411 million was spent by Indians in buying equities. Only $86 million went abroad to buy property. So basically, Indians have stopped buying properties abroad and are buying stocks. But one has to be careful because the Chicago VIX has also increased and is trading above 30%. You can expect violent swings in the US market as the election tightens. Originally, people felt that a Biden win would be very bad and the markets would correct. But today, as Biden seems to be closing in on a big historic victory, markets have rallied, saying that he will not win the Senate, so he will not be able to do much damage. All this is hogwash. What is basically happening is liquidity is driving the market, and liquidity can cut both ways, as last week showed. By investing abroad, you are getting into a market in which you have no clue. Except the top 40-50 companies, most companies' stocks are not covered here, and companies don't operate globally. We have no idea about the American market, and we have no clue of what they are consuming. Therefore, to directly invest in American stocks, of which we know little bit, would be foolhardy. The stocks we know about are already outrightly very expensive, have stretched valuations which cannot be justified by fundamentals. Sooner or later, market reality will catch up as it has caught up in the past. Only this time, it may take longer. Let's remember what Templeton told us. The most dangerous words in the stock market are to say, this time it's different. The fact that valuations have to be tied with earnings is indisputable. Low interest rates can keep the market high for some time, but cannot do it forever. Even the Oracle of Omaha, Warren Buffett, has not made big buys. In fact, in normal deals, he has sold more than what he has bought, and he is sitting with $148 billion. Warren must know one thing or two about markets if he is not punting his money. Think twice before you do it. The other thing which I am very worried about is Indian retail investors dabbling in options. Till now, they used to buy options and trade in futures and lose money. There are a lot of tricksters roaming around in the market who are trying to teach Indian retail investors to write options. Writing options is a highly risky business. You will have to put up a lot of margin to write options. If you do not know what you are doing about, and if you have not studied past data and you write options, sooner or later a violent move in a market which is moving, which can swing volatile, you can lose your pants and shirts. The problem in India is the action in the option market is only in the current month and the next month. Even in the third month, option interests are not there, and India is a shallow market. In such shallow markets, writing options is a highly risky thing. Sooner or later, you will be caught out. There is no point in regretting after the horses bolted out of the door. How do I give this example? In India, there are a lot of railroad crossings which are not manned. Some are inside the city, like in Madras and Bombay. People, even though the railroads are shut, waiting for trains to pass, people think they are very smart. Try to go under the pole that is blocking their access. I have seen people pushing their bikes according to tracks just before the train comes. The cannot brake like a car and save you. You will get hit. So it is better to obey traffic rules and wait for your turn for the pole to go up. But we are very patient, and we can see lots of people crossing these railroads. I have seen this, and I have seen several tragedies happening. This is similar to this. If you think you can cross the tracks before the train can come, you may do it successfully 10 times, but in the 11th time you will get killed. The first for 10 times when you succeed, it builds your confidence and you think you have a knack for it and you become overconfident. This very overconfidence saves the seeds for destruction and you get killed the 11th time. Writing options is similar thing. If you don't know what you are doing and you don't know when to stay out, you will get overconfident and at the 11th time get wiped out. I know a lot of people who have got wiped out writing futures on options. There is a gambler's fallacy. You cannot take losses. You think you can get more money and recover the losses. A gambler never recovers its money. If you want to write options, please study it in depth before getting into it. Thank you for watching Berich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Berich.